Is Vincent Luce with Forex Trading Institute. Please take a couple of minutes and go over the following risk disclosure. Strategy number 8, attack of the killer guppy. The pound yen, affectionately known as the guppy, is one of the most volatile pairs in Forex. It can move up to 300 pips per day easily. What many don't realize is that the direction for the day is often set at the open of the Euro-London market. The attack of the killer guppy waits for a breakout following the open of the Euro-London session, taking advantage of the new move. Now, what are the optimal pairs? We use the pound yen as preferred. We could also use it on the dollar yen and euro yen. We're going to open up a 15-minute chart. We're going to use the I-infinity indicator, which you got to call our office in order for us to send you that I-infinity indicator. We use a 5 smooth moving average, and we use pivot points. Our first take profit, half of our position, will be at 20 pips for the pound yen, 10 pips for the dollar yen or euro yen, and the second profit will be the next support and resistance level. Our stop loss depends on the range identified, and our signal frequency, this will give you almost one every day, and it usually occurs between 2 a.m. and 8 a.m. Eastern Time. The strategy setup, we're going to load a 15-minute chart for the pound yen and the dollar yen and the euro yen. Using the I-infinity indicator, we're going to enter 2200, 100, and 800. This will give us a box, the time frame between 10 p.m. and 1 a.m. and 8 hours after that. Then we're going to load a 5 smooth moving average, and we're going to load our pivot points. Now, what are the rules for entering a long trade or a buy position? Long trades are entered when the following conditions are met. Long trades are taken when a bullish candle is above the upper line by 19 pips, which is 10 pips plus the spread. On most brokers, the pound yen will have a 9 pip spread. That's why I said 19 pips or more on the 15-minute chart, and the 5 smooth moving average is at or above the upper line of the range. We're going to take our first profit, 20 pips on the pound yen after the 20 pips move, or 10 pips on the dollar yen or euro yen. Okay, and take profit for the second will be the next pivot point or support and resistance level. Stop loss is 10 pips below the low line, and if a signal is presented at the support or resistance or pivot point, we wait for the break. Now, rules for entering a short trade or a sell. Short trades are entered when the following conditions are met. Short trades are taken when a bearish candle is below the lower line by 10 pips or more on a 15-minute chart, and the smooth moving average is at or below the referenced range. Take profit is 20 pips for the pound yen, 10 pips for the dollar yen. Stop loss is 10 pips above the high line. If a signal is presented at the line of support and resistance or at a pivot point, we wait for that break of the line. Okay, let's go to the live market here. I'm just going to switch screens, and let's go to our platform. Okay, so how do we set up this strategy? Let's open up. We go here, File. We go to New Chart. Let's look at the euro yen. Okay, on the most demo accounts, they won't give you the pound yen, but they will give you the euro yen. Okay, and we're going to load this up on a 15, and you can see here other time frames. We'll go to 15-minute chart. Now we right click on it. I like taking out the grid behind it, and I like putting candlesticks and take the chart auto scroll off. Now I load, okay, the I-infinity indicator, so I double click on it, and on the beginning time I put 2200. On the ending time I put 100, and I want to put 800 on the last parameter, and I just click OK, and it gives me the boxes. Now I just gotta add I go to insert indicators, trend line, and I go to the moving average, and I put a 5 smooth, and we'll leave it at red. Okay, you could also load the pivot points because you might not want to take a trade if the pivot points are breaking out, which you would load the same way the pivot points. So what I do now, okay, now let's go back here and show you some examples on how do we apply this strategy. Okay, everything that the box is red is before the London session opens, and then in the blue is on our time frame. That'll be our section where we want to be looking for this breakout. Okay, if after the blue box we don't apply the breakout, you're going to see how effective this strategy is. So the first thing, we have to have a bearish candle. For example, here we got the bearish candle, and we were below, and the red line here, the moving average, was also out of the box. They both have to meet, because sometimes the market will go out but the red line will drag. We have to wait for that red line. Now we place our stop 10 pips above the box, and we're going to go for 20 pips on our first trade. For example, there we go. We got our 20 pips. And then we would rally and find a support and resistance for the second trade. And you can see how if we would have entered here, okay, at 119, approximately 55, it dropped almost 100 pips. So we got our profit here. Now let's look at another trade here. Let's go back. And here, this is an example where it was out of the range, but the moving average line was not out of the range. So we got to wait till the moving average gets out of the box. It got out of the box. We had a bearish candle. We were out of the box by at least 10 pips on the south side. We put our stop loss 10 pips above the north side of the box, and now we're going to go for 20 pips. And then the market retraced back a little, and then the market gave us more than 20 pips. So we would look for the next support and resistance point. And let's look at let's go back. For example, this would have been one where we don't, let me just show you this example where we don't enter a trade. The market went out, but we didn't have the moving average. And then by the time the moving average line went out, it was out of the box. So this is a good example, like showing you where you wouldn't take the trade, because that was after 8 a.m. So it has to break between 2 a.m. and 8 a.m. Remember, after 8 a.m., the London session starts getting a little weaker. I mean, the most of the trade should occur during that Euro session. Now, this is a great long example. Okay, for example, look at this. We have to wait. In this example, the market just peeked its head out, but it wasn't outside of the moving average line was not outside the box. Now we would have waited, go. There we had the market outside the box, but the moving average wasn't. There we are outside the box, and we had the moving, and we had the candle above. So here's where our buy position. We put our stop 10 pips below. And as you can see, the market easily gave us that profit. And we would look for a support and resistance level, or next pivot point level on a bigger time frame. I usually like using the support and resistance of a 60-minute time frame for a take profit too. So we had both positions gave us the profit here. Okay, so this is a very simple strategy, very effective, and you can use it in the Euro yen, pound yen, and the dollar yen. My name is Vincent Luz with Forex Trading Institute, and I'll see you at the next lesson.